morning, everyone. How are we doing today? How are we doing? Hope you're all doing well. What a day! What a day yesterday. So it's Thursday, May 2nd, and the first day in May yesterday. Sell in May and go away, right? Everyone's raving about that. Everyone's been talking about that, and we're seeing something of the sort realistically, right? Very famous saying coined by traders, investors, Wall Street: sell in May and go away. But investors are analyzing if the strategy still holds, any merit. The investment approach posits that stocks tend to underperform. Jeez, sorry. They tend to underperform in the 6 months through October, so investors should convert to cash at the start of May and then buy dips later in the fall. So the origin of the saying goes back quite a while, with reasons ranging from various cycles to bonus allocations, and others noting that the worst market crash in 1929 and Black Monday in 1987 occurred during this period. So many academic papers and market research have been written on the subject, with breakdowns by stock class time periods. While seasonal patterns do exist and equities could face some increased risk during the summer months, they still tend to go up over the long term despite additional volatility. Staying fully invested could prove safer than trying to time the market in any given year, right? So for traders, swing traders, maybe it might be something of the sort. And there are countless indicators out there for a better portfolio decisions, such as earnings, valuations, blah, 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 all these long-term things, decisions, interest rates, the same thing that we had talked about yesterday, that Powell, the Fed chair, so that Powell initially had a was taking center stage yesterday, and something that we're going to be talking about today as well. So realistically, over the last 40 years, it's the sell in May and go away has fairly a weak track record, with the S&P having positive returns in over 75% of the summer periods. This was said by Lawrence Fuller, an investment group leader at the Portfolio Architect. So the S&P 500 has historically finished the year higher when the first 4 months posted a gain, supporting a continuation of the bull market. So if anything, bears have been pointing to outsized market gains seen from late October, early November of last year, hitting the top in late March. So we had our first red month in April. If we look at this S&P 500, the futures chart here, if we look at it on a monthly, the April sell side is fairly convincing here. It's a pretty red month all in all. The peak of that was somewhere here, down to the bottom, about nearly, very close, shy of 7% on that month itself. So over the last from those 5 months after we started that rally, the stock market, the S&P 500, is up about 28% at its peak. Before slumping, right, on the futures about 7%, I think it's about 6% or so on the SPY, without those after hours peaks and whatnot. But in April, we got a fairly significant slump, right? The first 5% slump we've seen in quite a while. So dip buyers may be still waiting for potentially a little more downside, or getting very eager as things stand right now. And there are some risk signals, right? We saw yesterday was honestly something crazy. We had a very strong rally, and we closed the day actually red on the futures, which is very interesting to me. I didn't think that we'd get such a push to the downside, but trying to predict up down all the time is a bit more difficult. So this was yesterday, massive upside move, which that's what I was leaning towards. I was expecting a bit of a pump from Powell, but seeing it sell all the way back down was a little, honestly, interesting. But there was the accumulation of a lot of delta that sat into these lows, and I'll explain a bit more about that, as it seemed like a pretty decent opportunity to look for some longs on the overnight session. So let's talk about the presser and Powell. Recent data showing higher than desired inflation means that it'll take more time for the Fed to gain confidence that the price pressures are sustainably easing. So that was generally the main message from Powell yesterday, and the FOMC presser. So where he dismissed talk of stagflation after the central bank maintained the key interest rate at 525 to 550 for the sixth consecutive meeting. No changes, no cuts. And the FOMC also decided to ease the quantitative tightening by slowing the pace of its balance sheet runoff, pushing treasury yields lower, And Powell adopted a more dovish tone, realistically, but also expressed confidence that the long-term inflation expectations are fairly anchored. So, I thought that there was a bit more of a dovish tone that caused a lot of this upside momentum. Once we started talking after and answering questions, we saw a fairly strong push back to the downside. So we'll see how this kind of shapes up, but we have NFP tomorrow that come out pre-market, which is another big news event where I think that today markets can look to complete some of the auction to the upside before venturing possibly even lower. So we'll see how this shapes up realistically. If we can close back above that 51.25, 51.30, which proved very difficult yesterday, I think that next leg is building up to the upside. However, that's a very, very difficult task, and the bears are still generally in control with what's going on. So some other news, right? We have the earnings period today after the bell. We've got Apple AAPL, which is going to be closely watched, right? One of the final big names to report earnings realistically. So we also have Nvidia in a couple of weeks, but Apple's going to be front and center today after the bell. There might have been some other ones, but I might have forgotten them. But Novo Nordisk, right, NVO fell about 3% on the pre-market trading despite an outlook boost on the back of strong Q1 results. The performance was driven by increased demand for Novo's blockbuster GLP-1 weight loss drug, Ozempic, right, and Wegovy, I don't know what it is, which have taken the industry by storm and sent the stock flying a lot higher. So the Danish drug maker still faces stiff competition in the weight loss department from Eli Lilly, right, LLY, which has seen surging demand for its GLP-1s. Novo also warned of continued pricing pressures on its diabetes and obesity drugs, as well as supply constraints and shortages. So I generally do like this, right, from the longer term stuff. It's one of those foreign names that's fairly interesting to me. But all eyes are going to be on Apple after the bell, right? That could sway things a lot. Apple has been trying to slowly grind higher, but as we've seen, it's a bit stifled. So we're gapping up significantly today after yesterday's close red. We have the earnings after the bell, which are going to be imperative to see where this market can sway again, right? That's going to be an important factor that we want to watch very closely. And that's almost it, right? We're coming into what are we coming into? We're coming into the NFP tomorrow, which is going to be an important event that happens pre-market. It's going to sway markets, right? There's going to be a lot of volatility, something that I don't necessarily want to interact with too much or trade with too much. But let's take a look. Let's take a look at what these markets have in store to get a better idea of the S&P 500 futures, and we'll go from there. Let me see where the might be this one. No, that's a weekly. You know what? I'll just minimize this and increase this. So, decent upside on today's session so far on the overnight. What I'm seeing here from yesterday, we had the vast accumulation of this delta into the lows, right? Traders kind of getting trapped. Some passive buying stuck shorts into the lows, which has been the case for a few sessions, or I guess a week now, around that 50, 45, 50, 50 area. A big accumulation of these sellers that can't really push prices lower, actively selling and just getting rejected. So we made a nice move off that. Kind of a B-shaped profile, and looking for the acceptance outside of the distribution, which pushes us above that 50.68. And as you can see, 50.68, they got a little trapped into that area. We pumped up a decent bit off some jobless claims into that 90 area here pre-market and pulling back pretty sternly right now. So what I'm watching for realistically, if we're going to sustain some of this bid, I would honestly like to see that 70.68 hold on the S&P to get that swing back up, or if we can rebid that low 80. That's the case for the bull. That's what I want to see out of the bull. If I'm going to be bullish today, I want to see those guys hold those two areas. Otherwise, it gets very slippy once we start pulling prices under. You start moving under 65, 60. At that point, things completely flip, and we can go and fill some of those shorts that might have been stuck into those lows. So let's see if we can open up some of this upside today. I'm going to be looking for some of that upside momentum move, and I'm wrong under some key levels, 50, 60, right? If we start moving under that, then it's going to be very difficult for me to sustain that long, and the market's going to just keep on dragging on with this bearishness. I think that the market has more of a potential to see 5108, 5100 into that area, where I think the sell side wants to appear there rather than at these lower prices. So it's something to consider and something that I'm going to be watching today. So let's open up our live trading room. Let's see what we got cooking today in the markets, and I'll see you guys there. So check out community.tradeproacademy.com for our free Discord and some plans in there, some resources, what have you. Tomorrow, again, before I run off, tomorrow we'll be opening up our stream yet again on YouTube every Friday, or I shouldn't say every Friday, most Fridays, and I'll see you guys there. So let's get ready. Let's get